The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, good afternoon, and I've posted into Tiger TV the big day. That's today, the 24th of February. That's where we have the largest number of transits that we're going to have for a long, long time. And what we're looking at now is the next set of numbers that come in for cycles come in on April 21st, 22nd. I don't know if you follow astrology very much, folks, but you'll never see this again if you live to be 100 lifetimes, because this has never happened in recorded history. It's been 8,000 years since we've had that many things occurring at this time. Arch Crawford calls it the Grand Cross, but it's a very large number of things occurring on April the 21st and 22nd, so it should be pretty significant. They're all negative aspects, as you can see, after March 6th. Actually after March 1st, so my assumption is we're probably reaching an area up in here that looks to be ready for a, putting on some puts. In fact, I bought the 180 SPY April puts today for 231, and they expire that week of the 21st, 22nd. And we'll see if this is going to be the case. I'm going to cover the Bradley model very extensively here a little bit later. But first of all, I had a request from one of our listeners last week, called in, and he asked me again by email to put in the UNG, because we were making that 3 drive to a top pattern with very large increases in volume. This is the ETF for natural gas. And so that's why we were watching that very closely. What's interesting, folks, is this next chart. You probably won't believe it, but it's true, because I was up last night watching the thing, and it is really an amazing chart. This is the natural gas futures, okay? And you're going to see the wildest trading commodity we've ever had in my lifetime that I've seen. But you'll see that the natural gas made a high. I'm going to put the hourly up too, but it's had almost a $10,000 move today, folks, in just a matter of a few hours. I know other things in the market couldn't do that, but this is what's happening with natural gas. If we look at this on the hourly basis, you're going to see that same pattern when it made the 3 drive to a top pattern, and then has had this tremendous move to the downside. So you'll give me a second here, I'll put this up and you'll be able to take a look at it. But that's what's happened with natural gas. What's interesting about this is while this was happening, this occurred about 2 o'clock in the morning. It would have been about 4 o'clock in the morning New York time, when that top was hit up there at the 65.48 level. And then it's been down. But Bloomberg and CNBC have been reporting record high prices in natural gas. They don't even bother to look at the futures. I mean, I don't understand why they don't look at the futures, because sure, they were record highs earlier, but in a matter of 1 hour, it gave up over $5,000, and now we're down almost $9,500 from the high. So that's really not very good reporting, in my opinion. But that's neither here nor there. That's how they run their operation, and it's certainly not the way I would do it, but that's the way they do it. Now we have a situation here where we are making new highs now in the New York Stock Exchange Index. Again, I'm going to bring that up and show you where we are, because they're going to be talking about this big breakout that we're having right now in the New York Stock Exchange Index. We have now officially gone above the December 31st high. That basically has taken that out. We haven't done it yet in the Dow, but we've done it in the New York Stock Exchange Index, which tells us that it's gone higher than what it was on December 31st. That's basically it. I still believe if we go below the low we made on February 3rd, we're going to see something, very, very dramatic. Remember, anything that can go up this much can go down this much. So keep in mind that these things do change. And, Mercury goes back to direct motion on Friday the 28th. So that'll be an interesting thing to see if that happens also. But we have taken out the high of December 31st. Now, if we go to look at the Dow Jones Industrial Average using the Bradley model, you'll notice that we have not done that yet with the Dow. But you can't really use the Dow for the overall stock market unless that's all you're using, and that's not really the way to do it. The Bradley only uses the Dow, but that's not really what you're supposed to do when you're looking at the overall market. As you can see here, when we put up the Bradley model, we are at a 786 retracement on the Dow Jones Industrial Average. We've already made a new high on the NASDAQ, of course. We've made a new high on the S&P, and we made a new high on the New York Stock Exchange Index. For all practical purposes, the market has definitely gone in to new high ground. And you have to respect that, but we're very close to this spot. I can only say this, folks, that this day that we're looking at today, and I will say this with a lot of emphasis if you like, but we have a situation where we could turn at any moment and start to the downside. This is a very, very powerful day. I've been saying this since February the 1st or 2nd, that the two critical days of February were February the 3rd and February the 24th. So here we are, and it could be a day off, but not by much. It's not going to be something where it's off by more than 2 or 3 days. That's simply not going to happen. So we'll keep that in mind right here. But I'm recommending buying the 180 S&P puts for the April strike price. You have to pay around $2, around $2, a little under that for them, or right near $2, and they expire in 6 weeks. And we will see if we get a move down. We should move down sharply at least until April 1st, and then most probably into April 23rd. That's what the model says. Now, whether the model is correct or not, we'll have to wait to see. But it had the bottom on February the 3rd and 4th, and so I'm assuming that it's going to have the possibility of having the same thing occur with the top that is due today, at the very latest tomorrow, but most probably today. If it's today, you should see some type of reversal, but frankly, I doubt if you'll be able to see that right now. Now, I've got to get together here for 1 second. Here, I want to do the gold. If you'll give me 1 second, I will do the gold market, and then we have time for someone has a question here about the natural gas, and that is the question that they ask is, what is the margin on the natural gas? And folks, it varies by your commission merchant that you use. That's really what you're looking at, and you can't say exactly what it is, because each one of them is a little bit different. Because if you have more experience, you get a little margin break. If you have less experience, you don't get the margin break. So that's the main thing that we want to keep in mind. Now we have, we're going to put up the gold chart, because this is very interesting where we are right now. We are exactly at the 61% retracement of the high that we made way back at when we were trading at $1,435 an ounce. We hit that exactly today at $1,339. The time bars between the low we made in late December and end of January are exactly equal to the time bars that we made from February 3rd to where we are today. The ABCD move in that particular market measures exactly to where we are today. So all of that is telling us that we could go higher and we should be making a intermediate high in gold right now, and then after a pullback we should start going higher, because we've been up for basically uninterrupted for 5 weeks now in the gold. And of course we've been very bullish this, but now is the time where you want to be able to take some profits off the table and wait to see what happens. This is a spot where you don't want to get overly aggressive in gold. just because of the fact that we have, that we're up again, because we're just right at that 61% retracement from that level that we made way back in October. So, but we have, have some pretty positive moves to the upside, and silver is following along with it. Finally, it finally has caught up, but right now is not the spot to come in and buy the gold. I would definitely, in fact, I've been recommending to folks that have been long the gold, and also American Barrick and the gold index themselves. We're basically standing aside in that and waiting for a correction, to the downside to re-enter if we get to that level. So that's really what we're trying to look at. Now, we've had a request for someone to take a look at the wildest of them all. Well, there's nothing as wild as natural gas. Natural gas is in a class all by itself, folks. When you get stuff that moves $10,000 in a day, that's a trader's dream when that stuff happens. We're going to take a look at the IBB because we have a big ABCD here going back from January through February. That's due to top here within about $1 or $2 of where we are right now. But this market is this is the biotech index, but it is completing a big ABCD pattern up here at the 276 level, and today so far we've been as high as 273.85. We're sitting right on the high right now, so we're very, very close to that profit objective in the IBB, and it's been up for ever since the low down on September the 4th when we completed the ABCD pattern. There's a perfect ABCD right at the 382 pattern. We talked about that. That's one of the reasons, was one of the things that warned us that there could be a strong rally coming in stocks, and we've certainly had this strong rally. So this should be, if these things with the energy and the cycles that we're looking at are correct, it's only got hours to go before, if you remember the movie with Charles Bronson, Hours to Go Before We Meet. My favorite Charles Bronson movie was Telephone, and I always remember that. So anyway, but that's what it looks like. Whether that's going to happen or not, that remains to be seen. But that's what the ballpark is saying as far as looking at the biotech index. The gold and silver, someone asked a question about the open interest in the gold and silver, and they really haven't given us much of a inkling that there was anything big happening. We haven't had any big increases in gold in open interest or decreases, either one, in both gold and silver. It's still remained about the same. The volatility is catching up, one to the other, which is also very good. But this is what we're watching. Today's going to be an interesting day because of this February 24th spot. This is going to be interesting. Got the Dow up over 100, the S&P's up, everything's up.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back. We're back, folks, and I've had a request to take a look at the markets on a short-term basis over the last couple of days or so, and so I'll start out with the NASDAQ. And as you can see here with the NASDAQ, we came down to a 61% retracement last night, and now we're in the midst. We're at just a little above the 1.27. But as you can see, that the market is looking at the level of just about 10 points higher in the NASDAQ, and that comes in at the 1.618 level. And then you also you have the ABCD pattern that makes it the butterfly pattern completing. That's the equivalent to what I posted in just a few minutes ago on the NASDAQ, showing that the market had the potential to make that number, because that's the long-term pattern that we talk about, which is the 1, 2, 3, 4, 5 expanding triangle, which is one of our more powerful patterns, and it is the most accurate of any of the ones that we have. I'll put that again into Tiger TV so you can take a look at it. But that's what is in the habit of forming now. Well, what's occurring now, it's happening at the same time that we're looking at these astro things. And I know a lot of you folks out there and Tigerland and on the rest of the world, don't look at this astro stuff very much, and maybe you shouldn't, and maybe I look at it a little too much, I don't know. But when I see something that has really strong characteristics, it's hard not to talk about it, because it does mean something. And I know when it's going straight up like it is right now, It looks like it's never going to work, but, and maybe this time is different. Maybe it's not going to work. The one thing we do know that the news has nothing to do with what's going on with the market. They've already talked to us about the QE2, and they're not going to do that anymore. And we've had trouble, just about, in Serbia, in the Ukraine. We're having trouble in Egypt. We have trouble in Serbia, all the other places in the world. And it doesn't make any difference. These markets go up because of the cycles that are there. I firmly believe that. And I will probably always believe that. But in fact, that's what we're watching when we're looking at this. Now, the next one we're going to take a look at is the S&P 500, because we are also very close to that same type of a move. If you'll give me 1 second to blow this up, we've just completed the ABCD here, and the $64 question is whether we're going to go up the next 3 points to finish the 1.618, and I would be really surprised if we did not make that today. But today should be the high day coming in. Where it's going to close today, we've got 3.5 hours to go, which anything could happen. It's not going to do anything like what natural gas did, of course, but markets that go straight up have a tendency to come down quite a bit. The low that we made last night was a 61% retracement of the low we made last Thursday. And so all of that is fitting into the spot that it looks like it wants to complete the final leg up here, and then we'll see where we're going to be going from there. That's the main thing that we're going to be watching. Now I'm going to do the next one that someone asked me to do was the IWM, which is the I've never traded this, but this is the we're making a double top here too. We're not quite there, but we're very, very close, and we are due to make a head and shoulders pattern in this. But if we make a new high, this head and shoulders pattern is certainly not going to be working. But we have to get in this Russell small caps, we've got to get above this 118 level in order to tell us that we've not made a new high. As a matter of fact, I think we have made a new high. Let's double check. 171.31 versus 117.37. It's only 6 cents away from making a new high. Whether it's a double top, I don't know or not. I do know this, that thing that I posted earlier about the energy of what's happening, that should be it. And if it's not, then I'm going to turn over the reins to Basil and Steve and walk off into the sunset. And we'll see what happens from these levels. So that's what we're keeping. That's what we're watching here so far on the short-term basis for the stock market. The Dow Jones, as we've posted already, has not made the 786 retracement yet of the whole move. We're very, very close. As a matter of fact, I think we made that since we came on the air. We hit it exactly since we came on the air. We made the exact 786 at the Dow Jones E-mini. Hit it at 162.70, so that completes the 786 retracement, and we'll see what happens. Yeah, we got the Dow up 150, we got gold up $15, and the S&P up 20.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, and now we have a call from our friend in Philadelphia. John, are you there?
Hey, Larry.
How are you? What can I do for you, my friend?
Thanks so much for sharing that graphical depiction of the transit chart data. That whether it marks a turn for us or not, it's fascinating to see the data presented that way. So thank you so much.
It's the best stuff that I've seen. Whether it works or not, I don't know. It's only a probability, but this is one of the higher spots. What can I do for you, my friend?
Larry, I'd like to ask you if you could pull up the daily and or weekly chart of the U.S. dollar Swiss franc.
Okay. I started with the Swiss franc weekly, and I know you're probably looking at that head and shoulders pattern at the 382 level.
Larry, what I will tell let me tell you where my position is. I have taken a position already in the U.S. dollar Swiss franc in the foreign exchange market. Of course, there is futures traded on the Chicago Merc, which is the Swiss franc, so it'd be the inverse. But last Friday, I shared with traders in the den a setup I saw that a low-risk buy would set up if the Swiss franc would get down towards 88.50, the U.S. dollar Swiss franc. Larry, I got that chance this morning around 3 a.m., 4 a.m., somewhere in that time frame. So I'm long the U.S. dollar Swiss franc at 88.60. And I've got a little bit of a lead, not much. But if this trade starts to work, I would like to ask you, as you see the charts, where you could see this thing going.
Well, John, let me say that, it's touched that 382 level now over the past 8 or 9 months 3 times at that 88 level. It's made a head and shoulders bottom pattern just absolutely perfectly. All you need is a move above 90. That's quite a ways, more than 100 pips from where it is right now. But if you can get a move above 90, this could easily go to par. In other words, you could go back to 1.00. That would be a $12,000 move from where it is, right now. But you hit it spot on with the absolute low today. It was a beautiful 1.27 move, and it certainly had a really good snapback rally. And I'm watching the pullback that we're getting here. We're getting a small pullback here, because if it can hold the 88.65, to me that would be a very low risk entry. To enter. The one thing for sure is if it goes below 88, you don't want anything to do with it.
No, understood. I agree with that entirely. Let me pursue the comment you just made. If it starts to rally off of this 88.50 area over 90, that sort of thing, if that happens, where comes the idea that you just shared, that a rally up to par is conceivable, if not likely? Where does that come from, please?
Sure. What I'll do, John, is I will post the daily here and just give you the number that I'm looking at. Because you remember the last high that we made back in January came in at the 91 level, correct? Correct. Okay, so what you need to do is if you get above 91, the next level to look at will be where we were way back. In fact, you can see it here on this daily chart. It's at 99. It's actually not at par. It comes in at 99. If you just give me 1 second to pull it up here, I'll show it to you because we've been watching this quite a bit. You'll see that we could get back to that 99 level without very much trouble at all. But it goes in sequences. The first one is above 91. The second one is above 92. And then after 95, we could easily go back and challenge. Even the 61% retracement of the whole move from 2010, John, takes you to par at 1.00. I mean, you can see that. You can see that even on. I'll just show that to you on the InTiger TV. You can see that the 61% retracement takes you back to par. But the fact that we held that 382 level so many times, and it took a year and a half to make the 382 retracement. Boy, that's a lot of accumulation, in my opinion.
Right.
I mean, they tried to hammer this stock down, and it's not. And with this potential perfect head and shoulders pattern on the weekly chart, it certainly tells you what your risk reward ratio would be on this if you are in fact correct.
Very good. Very good. I appreciate that immensely. So I will just lastly. Actually, I'm looking at InTiger TV, and I see the daily chart that you've just posted, and it's that daily that feature where there is almost a perfect ABCD pattern at today's low. Not quite there, but almost perfect. Mm-hmm. And that is, frankly, what has attracted my attention to look for the buys as of last Friday and then into this morning, coupled with that weekly formation that you had shared. Gosh, that was way back before Christmas. So I've just been patiently waiting and took a shot. So
okay. Well, listen,
Larry, let me in parting, just wanted to share one idea. You had started early in the show speaking about natural gas, in which you identified how the huge swing has taken place here in this spot contract. That is the March futures. Just for the record, that contract expires on Wednesday, and then we go off to the April, May, June contracts. Larry, I am attracted to the natural gas chart, looking at the weekly chart, seeing the swing high of 2013 first quarter, somewhere around 444, I believe was the number. And I'll speculate that during the coming months, as winter ends and as the industry has this dire need to buy gas to stuff into storage for next winter, I'll speculate that the obvious support mark in natural gas in April, May, June, July will be that prior swing high of 444, and I'm actually looking to acquire or accumulate positions in those summer futures kind of against that level. I just wanted to share that idea.
Well, John, I can tell you this, if you'll be just a little patient today, if it just repeats what it's done in the last 3 hours, you could get that today. Because it's come down 10,000, that'd just be another 10,000. That would be $20,000. So you'd be looking at you could get it today. Of course, you wouldn't want it today if you got it there, but if you could drop $10,000 in 4 hours, it can certainly drop more if it wants to. There's no question, about that. That's what we want. With these wide-ranging bars, when the market goes up and then reverses like it is, those are very, very telltale signs that you don't want to try to catch a falling knife and buy it. But like you say, if you wait till spring, around March 21st or something, and the market comes down quietly down to that 440 level, that would be a very good entry point. But you certainly wouldn't want it if it got there today.
No doubt about it. Larry, thanks so much for your help. I appreciate it.
It's my pleasure, John, and I hope your weather clears up back there. My grandson keeps telling me it's pretty cold, so hopefully it'll start warming up maybe around the 4th of July.
We're going to have to come visit you on Tucson.
Come on out. Love to see you, as a matter of fact. Okay. All right, that was our friend John from Philadelphia. Okay, we've still got the markets are still pretty strong today. Now, we are going to take a look now at one of the stocks that has been the big leader in the market and has given up the ghost, and that is Amazon. The reason why I'm showing you this is because this is almost a duplicate of what happened with Apple when Apple was at $700 a share. If you remember, the market broke from 703 down to about the 560 level. Then we had a 382 retracement up to 590, just like we've had here in Amazon. And then the market went down to the 285 level. That's what I think we're going to see in Amazon here. We have a weaker than market stock. It's making lower highs, even though today it's strong. It opened right at the 786 retracement today, down at $45 a share, $44 a share. And my trigger here is once we get below 340 a share, that would be the trigger that this is headed down to the 285 level. Now, if we get above the 382, if we get above the 368 level, another $17 higher, of course, this analysis that I would have would be wrong. But right now, that's what it's looking like. It is a weaker than market stock, and it is also in a very strong downtrend. It has a huge gap that it tried to fill at the 382 and couldn't. So these are things that you want to pop up. I know it's a wonderful company. No one can doubt that, but did the same thing with Apple. Apple's a wonderful company too, and it did exactly the same thing that Amazon is doing right now. We're going to take a look at Apple, and you'll be able to see that area that we were talking about when we were looking at this. We'll go back to October and November of last year, and you'll be able to see that that's the same thing that happened with Apple. It made a 382 retracement up around the 590 level. That was exactly 382, and from there the market came all the way down to the 385 level, which is what we're looking at. As you can see, we're making lower highs all along here in Apple. It's a much weaker than market stock. It's even lower today also. So in a really strong market. So that's telling you that it's certainly it's in a downtrend. There's no question about it. When you got lower tops and lower bottoms, you're in a downtrend. And over the past 3 months, that's what we've had in Apple. It's been in a downtrend. No matter what the news is, we had the very bearish news, and then the market went into the gap area and filled it, and now it's starting to move to the downside. So that's what we're watching. I had a request to take a look at the silver market because we've had a big move in silver the last few weeks here, and it's culminating. Well, I think it's culminating. I could be wrong, but we've had a big move in silver. We've gone above the. If you'll give me 1 second here, we completed above the 786, I believe. If you'll give me 1 second. Actually, we hit it exactly. I'm sorry. Give me. I have to update this because my data is off by just a little bit. But we were right at the 786 retracement. of the high we made back in October, and that is, I believe, 50% of the move that we made from way back in September when we were at $25 a share. Yeah, that's the 50% level. So this is what we're looking at in silver. We're exactly at the 786 today when we hit that the 22.18 level was the 786 retracement on the silver. So we hit the 61% retracement of the big move on gold and the 786 retracement of the October move in silver. I believe these markets are going to go higher, but I believe we're going to have a pullback to buy them, and that's what you want to be watching to do, is to buy them on a pullback. And we felt all along that silver and gold had been bottoming down there in January. They did everything that they possibly could to tell us that that's what they wanted to do. Now they've had a tremendous run. We've ran over 15% move in silver and gold in a matter of just a few weeks, and this is where it should pause and take a breath and see if it's going to come down to a legitimate level to try to buy it. So that's the basic of what we're taking an eye at here. At least that's what we're looking at. One question that someone asked me here about the Apple is, where would my buy price be on Apple? And it would be down into the area of about 460, I believe, is the area where the big ABCD starts to move, and that's where we'll be watching that also. If you'll remember back on February 3rd and 4th, I featured in the newsletter the 7 reasons why I thought the market was going to have a really strong rally. 2 of those reasons were the emerging markets and also the Japanese stock market and the Chinese stock market. All of those were finishing Gartleys, and they've all completed retracements as of Friday. So all of that is starting to come together. I do know with 100% certainty that if we go below that February 3rd low, we are in big trouble, and it's going to be really big trouble. Those of you, I've been doing this with TFNN now for about 7 years, and back in August of 2007, we had a really big astro date that occurred that day, and the market made a bottom on August the 15th of 2007. And we went right up into October. We went up 6 weeks into October and made a new high, by a marginal new high, by the way. And then from then, all hell broke loose. And the low that we're looking at on February is even more important than the one that we had back in August of 2007. So that's pretty much how it sets up. That's really what it looks like, in my opinion, from a cycle point of view. We've had a request to take a look at the bond market, and the bonds have been under a great deal of pressure for a very long time, and they continue to trend to the downside. We've had a pretty good rally, and then the market has given up the ghost, and we've had lower highs here for the last several weeks. I still think bonds have a chance to have a little bit more of a rally, but presently they look like they're still in a downtrend, and we should get down at least another point to the 786 at the 131.20 level. Okay, we got the Dow up 100 and some, and gold up 15, and markets are moving.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Terrell Martin here on TFNN.
Okay, folks, what we're going to do next is we're going to focus on the 2 currencies that I watch. Well, I watch all the major cross rates against the dollar, the Australian, the Swiss, the euro, the yen, and the pound. Those are the big ones, and those are the big ones that I watch. But we'll look at the euro first, because we've been in a downtrend in the euro. That 138 level in the euro is very, very important. If we ever get above that, that means the dollar index would be going below 78, and that would tell us that the dollar is going to be under big attack. And if that happens, that means that these bonds are going to go down into the El Sur, because they'll be trying to pay the debt on those bonds with funny money, and that's not going to be good. It might be, you might think it's good, but it is certainly not a good thing. Now, when you're watching these markets for potential, high volatility, you really should keep an eye on the euro and also the Japanese yen, because when these spreads, the bid-offer spreads, start to widen, the spread on the euro is usually 1 pip. Sometimes 2, but if it starts to widen out to 10 and maybe even 20 or more, that's telling you that money is getting scared and something really bad is going to happen. It won't be to the upside. So kind of keep an eye on the currency markets, because if that happens, that's going to be the tip-off. That's what happened in 1987 when Secretary Baker was over in Japan and the deal fell through for the negotiation for some kind of trade agreement. I forget exactly what it was, but it started with the currency markets going nuts, and then it came over to the U.S. stock markets and gave us the best buying opportunity in the century, the decade of that century, which was 1980s. The low that day was an exact 61% retracement of the low that we made from 1982, and from then we went on all the way up to 16,000 so far. So far, the Dow has not been above that 786, but all the other indices have touched it out. Whether the New York Stock Exchange Index closes into new high ground or not really doesn't make a lot of difference. Today, what makes a difference is the fact of whether this market is going to see that this energy point that we're looking at is going to be respected. Now, the next chart that we want to look at is the Japanese yen on a daily basis, because that has a very high correlation of what's going on with the Nikkei, the Japanese market. And as you can see, we have a potential that we could go 100 pips higher here in the yen. In fact, I'm really surprised that the yen is not sharply higher today, given the fact that we've had such a strong move in stocks, because the Nikkei was up slightly, of course, last night, but it should follow through to the upside just because of sympathetic buying what happens in the U.S. There's a correlation better than 7 out of 10 times that if we close stronger here, they open higher there. That doesn't mean they'll close higher. That just means that they're open higher. So keep in mind that's what we're looking at when we're watching the currencies. The currencies are the big key, folks, because it's the spot where they say follow the money. And when that happens, that's what you want to be watching, because that gives you the key to whether to be really afraid of these markets. Well, you should always be afraid of them, but that tells you whether you're going to be at a spot where the market's getting ready to make a turn, and have some really big fireworks, which we will see. We mentioned here several times that starting in February we were going to see big volatility, and that has not changed. It's just going to get bigger and bigger. That's it. By the way, since we're at the press right now, the natural gas has now moved $10,000 today from the high. However, from the low we made last Friday, the market went up $6,000, and then it's come down $10,000, $16,000 in less than 2 days. Live every day in an attitude of gratitude, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You're watching Tiger TV.